morning. My name is Rahab Karanja from Kilimo, Salama. I'm a project manager there. Our mission is ensuring farming livelihoods. We are an intermediary. We pool farmers and link them to insurance. We aim to reduce their susceptibility to risk and hope that due to that reduction, they will be encouraged to participate in income generation activities. Now, this is how Africa used to look like a long time ago. Well, it could actually be one of the villages that we are working in right now. Imagine if you had to start a business providing financial services to this community. What would you ask yourself? How would you be able to do this? The first thing you'd probably be wondering, how can you reach this community? Do you need to open an office? What language do they speak? Do they even know what insurance is? Can they afford it? Drought is a reality in most parts of Africa. Every 1 or 2 years, there's a minor drought. Every 6 or 10 years, there's a major drought. If you had such a farm, at this point, you've burnt your investment. The money that you spent on the seeds, the money that you spent on fertilizer, your labor, the time, all of it down the drain. And to make matters worse, that you're not going to have an income for the next couple of months. If you're a farmer in this community, what are your options? Well, you could probably get out of farming, or you could decide to sell a cow, sell a goat, have some money to spend on your farm, but you still have to feed your family. So you could reach out for food relief, as most farmers end up doing, or you could get your children out of school, keep them out of school so that they can work on the farm. So how many farmers are we talking about? How big is the market? We did some market study, and our focus here is not total population of farmers, but total farming households. So we think that in every household of about 6 to 7 people, maybe only one person would be able to insure on behalf of the rest of the family. Looking at the math, we know that most farmers are going to when they're calculating the value to insure, they would probably consider the value of the inputs they have spent, that is the investment, or they will consider the harvest that they're expecting, the income that they're expecting. So in Kenya alone, farmers are spending up to $1 billion in inputs, farming inputs, that's seeds, fertilizer, and the like. Now take an average of 10% insurance premium cost, and you can see that would amount to $100 million in insurance premium, and 800 million if you are considering the harvest. But so the farmers are over here in that community, and they are wondering what to do. The insurance companies are in the big city on the other end. How can the insurance company reach these farmers? Typically, traditional insurance relies on field inspection. It relies on visiting these farms, making sure that a farm actually exists, that they actually planted or prepared their fields. Now that is a challenge for smallholder farmers. A smallholder farmer will probably spend about $10 on insurance premium, considering if they only had about an acre to farm on. And the insurance company will spend on average $50 to send out an officer to go and assess just one farm. So the math doesn't add up. How can these insurance companies reach these farmers? Well, as a Kilimo Salama, we try and look at what solutions can we provide to both parties. Well, the cool thing, as somebody else had mentioned, is that all these farmers, at least in one family, there's a mobile phone. So we utilize that to enable accessibility. We also use the existing distribution channels. We make it easy for farmers by allowing them or enabling them to access insurance or purchase insurance at the same shops where they buy seeds, where they buy their fertilizer. So that's what we're referring to as the retail agents. So mobile phones are used for enrollment and making payments. So the next question is, will a farmer be able to afford this insurance? Most of us perceive insurance to be expensive. Now, to reduce the entry barriers for these farmers, to encourage them to try out insurance, we mirror their the way they do their purchases. We know that all farmers will not do all their farming, will not purchase all their farming inputs at a go. So we have created a pay-as-you-go system so that If a farmer today comes to buy their seeds, they can pay premium just for that investment. The following week, if she sells some vegetables and comes back to the input shop to buy fertilizer, she can insure the value of that to an extra installment for insurance. The other innovation, we have facilitated a partnership with input companies, the seed companies, fertilizer companies, chemical companies, who subsidize the premium cost for these farmers. So they match the amount that the farmer needs to pay. For example, if a farmer needs to insure or needs to pay a premium of $10, the farmer only pays upfront $5, and these companies pay the other $5. They would use that as a marketing, it creates an advantage for their business if it's known that their seed has insurance. So for any risk to be insured, it needs to be measurable. How do you measure drought? So we install weather stations close to where the farmers are to be able to objectively measure the deficit in rainfall. So if the data that we collect and put that into a model, if we find that rainfall reduced to a certain extent, then we pay all the farmers in that area. We are basically cutting out the cost of field inspection. So we also know that insurance is based on trust. And these farmers would most likely want to get this information from people they trust and whose language they understand or whose language they speak. So we have invested heavily in a network of community-based trainers who train these farmers on insurance and introduce them to the whole concept. So what is our business model? How do the players in this market make their money? So we will take the example of $10 and see how that goes down. So the farmer pays their $5 in premium to the agrovet as they're buying their inputs. The other $5 comes as a subsidy from the input company. So if a farmer had insured their value of what they bought for seed, then that is going to go to the retail agent. A commission is retained there of 10%, so $1 remains at the retail agent. And then passing on to Kilimo Salama, we retain a further 10%, so $1 remains at Kilimo Salama as the intermediary. So the $8 is passed on to the insurance company. We are currently working with UAP Insurance in Kenya, and then we charge the insurance company a transaction fee of $1, which is 10% also. So consider how expensive an intermediary in this kind of business would be. We need to do marketing, we need to install the weather stations, we need to basically develop the market for the insurance company. So we charge them a transaction fee on their margin, not on what the farmer pays. So I want to briefly highlight some of the key innovations. One of the things that make us be able to do what others are not able to do for this kind of market. So the mobile phones we had, they're already, almost every household has a mobile phone. So we use them for enrollment at the retail agents. Basically, they would have a mobile phone like this at the shop and a file with codes. Just like what happens at the stores when you're going to buy anything. So the camera at the back reads the code. We have installed a software inside the mobile phone, basically turning it into a registration device. The process at the shop would be, the first question would be, what is your reference weather station? So we're trying to find out which weather station is closest to your farm, so that we can be able to measure accurately what is happening around your farm. The next thing they're going to be asked is, what input are you buying? So what input are we going to insure, so that we know the value of insurance? And then it works backwards and calculates the premium that the farmer should pay. That premium is deposited with the retail agent. And then the agent collects the phone number from that farmer. Instantly, our software or our system communicates with the farmer, because now we have their mobile phone, we have their ID. They get us an SMS while they're still at that shop. And the SMS says something like, this is your policy number is this number, and the risk insured is drought or excess rain. These are the crops insured. This is the end date of your contract. So basically, we're making it fast. They don't have to wait for a whole month to get their contract. They get that on SMS. The other benefit of using mobile phones is that since we have their phone numbers, they can receive SMS advisory throughout the growing period. So the input companies that we have partnered with can send them an SMS telling them, looking at the weather in your area at this time, you're probably susceptible to armyworms. And so you should spray this. So that is a big benefit for the farmers. The other innovation that we have introduced is weather index. This is what enables us to to assess the risk and to be able to calculate how much to pay these farmers in a timely manner. So there's no claims process. If you're wondering, what happens in case of a claim, so automatically we know what's happening on their farms, and if there's if the data shows that there was a deficit, then every farmer is paid. So this innovation also enables us to scale geographically very easily. Now, our projected revenues at the top, we are going to, we show what we have been doing in Kenya. We have been doing this for this is our 4th year now. And using the financials, we have been able to project what we could possibly see in East Africa. The graph here shows revenue versus expenses. The green is the revenue, and the pink or the red is the expenses. So you see that revenue grows sharply, and we should be breaking even by 2016. The main expenses that our business incurs is training of the agents, training of farmers, installation of these weather stations, weekly monitoring of quality checks. We need to be sure that farmers are properly trained, and so we use a call center, a toll-free call center for this monitoring. Now, we have a couple of ideas of how we could reduce that cost. Now, the figures before have not factored that in, but we know that going forward, since our model is tested, it has worked in Kenya, expansion to East Africa, gradually starting from Rwanda, we are thinking of Uganda and Tanzania in the next couple of years, will enable us to improve our profitability. We also want to make our distribution more effective, to focus more on enrolling cooperatives, large and MFIs, large institutions who have a lot of farmers rather than the individual contact with one farmer. So the data could also be an added revenue for our business. And we have a lot of expertise in understanding the market. So we spend about 2 years just trying to understand the farmers. What do they need? What are the solutions they're looking for? Already, we have received many awards for the work that we are doing. In this year alone, we received an award from Financial Times. It was about June this year. They recognized us for sustainable financial solutions. Our key expertise are in actuarial valuation, so we actually have an in-house actuary. We have experts in product development, agricultural extension, and climatology. So we have tried to blend all the key people that we need to make this organization successful. Currently, we are grant funded by Syngenta Foundation, a Swiss foundation, and IFC. The key partnerships that we have that we have in Kenya currently are Safaricom for the mobile transactions. We are working with Sidco, Syngenta, and MEA as the input companies who subsidize these farmers, and UAP Insurance to carry the risk. Now, as you have seen, what have we been able to do so far? We started in 2009, and in that year, we were able to insure 200 farmers. In 2010, 12,000 farmers. 2011, 23,000 farmers. This year, the figures currently stands at 70,000, and the registration is still continuing. So we are hoping that the number will still grow. We are projecting that from 2013, once we get into one East African country, the number would grow to 450, and you can see the phenomenal growth that we are projecting. But looking at the percentage growth, that is not unreasonable. To be able to reach about 2 million farmers in 2016, we are looking for $8 million grant funding to be able to sustain us till 2016. But most of our operations are currently commercial, so we would only be looking for grant funding for those aspects that are that are of public benefit, like the weather stations, the research and development. I have talked a lot about figures and a lot of farmers that we could reach, and it's easy to to forget what is the impact that that we have. What are the farmers, or what is it like for the farmers that we reach? This is our first farmer to insure with us in 2009. She took a leap of trust, working with us as a woman. Her name is Jane. And luckily for her that year, or unfortunately there was a big drought, and luckily for her, she did not have to forego food to buy inputs. So talk to us, and we could talk about how to enable more farmers like her benefit from our services. Thank you.